warm welcome to the Q3 FY 2024 results conference call of KrsnaaDiagnosticsLtd. Before we begin, I would like to remind all the participants that today's call may contain statements that are forward-looking statements, including, but without limitation, statements relating to the implementation of strategic initiatives and other statements relating to Krsnaa Diagnostics' future business developments and economic performance. While these forward-looking statements indicate our assessment and future expectations concerning the development of our business, a number of risks, uncertainties, and other unknown factors could cause actual developments and results to differ materially from our expectations. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Janil Shah from JM Financial. Thank you, and over to you, sir.
Yeah, hi, good afternoon, everyone, and welcome to the Q3 FY 2024 results conference call of Krsnaa Diagnostics Limited. Joining us today on the call are Mr. Rajendra Mutha, Chairman and Whole-Time Director, Ms. Pallavi Bhatevara, Managing Director, Mr. Yash Mutha, Joint Managing Director, Mr. Pawan Daga, Chief Financial Officer, Mr. Vivek Jain, Head Investor Relations. I would like to now hand over to Mr. Rajendra Mutha for his opening remarks. Thank you, and over to you, sir.
नमस्कार, मुझे आप सबको ये बताते हुए बहुत आनंद हो रहा है कि आपकी कंपनी ने इस 9 महीने में जो विकास हासिल किया है वो डायग्नोस्टिक उद्योग में विकास दर से बेहतरीन है। और एक खुशी की बात है, अब बात आपको बताना चाहता हूँ कि आपकी कंपनी को वॉइस ऑफ द हेल्थकेयर द्वारा बेस्ट लैब चेन ऑफ 2024 का अवार्ड मिला है। हमने पीपीपी हमारे विकास को आगे बढ़ाते हुए आपको बताना चाहता हूँ कि अपनी कंपनी ने 2 बड़े रेडियोलॉजी टेंडर अभी हासिल किए हुए हैं, एक महाराष्ट्र और दूसरा मध्य प्रदेश। दोनों राज्यों में कुछ मिलकर 23 एमआरआई और 17 सीटी स्कैन इंस्टॉल करने हैं। राजस्थान टेंडर के बारे में आदरणीय हाईकोर्ट के निर्णय आना बाकी है, जो इस महीने के अंत तक आने का अनुमान है। और जैसे पहले भी हमने बताया था, हमारी पूरी कोशिश है कि आपकी कंपनी राजस्थान के बिना टेंडर के 30% CAGR विकास दर हासिल करने की पूरी कोशिश कर रही है। आपको ये भी बताना चाहते हैं कि कंपनी में मैनेजिंग डायरेक्टर पोस्ट पे पल्लवी बटेवरा ने व्यक्तिगत कारणों की वजह से पोस्ट इस्तीफा दिया है और कंपनी में एग्जीक्यूटिव डायरेक्टर पद पे वो कार्यरत रहेगी। पल्लवी ने कंपनी को इस स्तर पर पहुंचाने की बहुत अहम भूमिका निभाई है। अब वह उच्च जिम्मेदारियां लेते हुए दूसरे नंबर की कमान संभाल लेगी और संगठन को आगे बढ़ाएगी। आपकी कंपनी के विकास को देखते हुए हमने यश मुथा जी को जॉइंट MD के पद पर नियुक्त किया है। जब से यश ने कंपनी को ज्वाइन किया है, तब से कंपनी को एक कॉर्पोरेट में बदलने और विकास के साथ साथ सिस्टम और प्रोसेस इंप्लीमेंट करने में यश का काफी बड़ा सहयोग रहा है। मुझे आश्वासन है कि इस नए पदभार संभालते हुए आपकी कंपनी को ऊंचाई पर ले जाने में यश मोता समर्थ रहेंगे। उनका साथ देने के लिए हमने डॉक्टर प्रशांत को CEO पोस्ट के लिए प्रमोट किया गया है। डॉक्टर प्रशांत MBBS और IEM अहमदाबाद से प्रतिष्ठित संस्था के शिक्षा प्राप्त है। उनका स्वास्थ्य सेक्टर में 13 सालों का अनुभव है। जैसे हमने पहले कहा था, आपकी कंपनी अब B2C में आगे बढ़ने का प्रयास कर रही है। इसी को देखते हुए हमने 100% सब्सिडी चालू करने का निर्णय लिया है। ये कंपनी का फोकस केवल B2C बिजनेस को पैन इंडिया बढ़ाने का रहेगा। इसके लिए अलग अलग मैनेजमेंट टीम बनाई गई है। अब आगे की कार्यवाही के लिए मैं मिस पल्लवी को सौंपता हूँ।
Ladies and gentlemen, good afternoon and thank you for joining us today for KrsnaaDiagnostics Q3 FY24 earnings call. I want to express my gratitude to each one of you for being a part of this call. Our investor presentation has already been shared and is accessible on our website as well as on the stock exchange's website. I am sure you have had a chance to review the presentation. I would like to confirm the news shared by our Honorable Chairman that I have resigned from the post of Managing Director. However, I will continue with the company as Executive Director from the start of next financial year. I would like to take this opportunity to thank my fellow directors and the management for extending their cooperation during my tenure as the Managing Director. Now, I would like to brief you about the industry and our company. Healthcare is one of the key sectors in India in terms of both revenue and employment. The share of expenditure on health with respect to the total expenditure on social services has increased from 21% in FY19 to 26% in FY23. Diagnostics forms a very essential part of the healthcare industry and is usually the first step towards treating diseases, starting from the diagnosis of the disease to the prognosis and determination of treatment regime to post-treatment monitoring of the patient. The diagnostic industry is highly competitive and fragmented in nature, and the market share of organized players is only limited to around 17%. The major amount of the market share is with the unorganized players. More number of players in the industry are focusing on geographical expansion and inorganic growth, acquiring regional local players to capture higher market share. The focus of government is development and performance. It resonates well with our business model. In the interim budget of 2024, the focus on increasing and improving healthcare facility was clearly visible, wherein the announcement to increase more medical colleges across our country, inclusion of maternal and child healthcare scheme under one plan, also increasing the Ayushman Bharat scheme to include ASHA workers and Anganwadi workers and helpers. Diagnostic industry under PPP model is an ever-evolving and dynamic sector that consistently confronts new opportunities as well as unforeseen challenges. Krsnaa, as a PPP service provider, tirelessly strives to preserve life and promote the well-being of individuals. Customers today seek more accessible and affordable solutions to address their immediate healthcare needs. The industry demands has accelerated the adoption of digital health technologies, opening doors to innovative approaches in diagnostics, treatments, and preventive care. Amid these transformative times, Krsnaa remains adaptable and agile, embracing technology and fresh paradigms to effectively address present and future healthcare requirements. Over the past few years, KrsnaaDiagnostics has evolved into a fast-growing and esteemed diagnostic care provider serving communities throughout the country. Our robust capabilities enable us to deliver affordable and superior healthcare services to the remotest and underserved regions of the country. Underserved regions of the country, I beg your pardon, by seamlessly blending dependable diagnostic services with affordability, we have garnered high customer trust, paving the way for an exciting and promising future. We are making relentless efforts to extend our reach by strategically opening new diagnostic centers in the under-penetrated market across Tier 2 and Tier 3 cities. Our aim and focus is to ensure that even individuals in remote areas can benefit from our advanced diagnostic services. We ensure that access to high-quality healthcare is not just limited to metropolitan areas. We prioritize adherence to the highest quality standards using certified testing reagents and employing qualified radiologists and pathologists to ensure unparalleled accuracy and precision in our diagnostic services. All these initiatives provide Krsnaa better business opportunity in the near future. Now, I would like to hand over to Mr. Yash Mutta, our Joint Managing Director, to take you ahead on company development. Thank you.
Thank you, Ms. Pallavi. Ladies and gentlemen, good afternoon. I would like to thank the board of the company for considering me for the post of the Joint Managing Director. I am pleased to present the impressive performance of KrsnaaDiagnostics Ltd. during the third quarter and the first 9 months of fiscal year 2024. Now let me brief about our recent developments. We have successfully operationalized our Assam pathology project. The large project of Assam, which we secured during the first quarter of this year, encompasses the establishment of 10 laboratories, 44 collection centers operational 24/7, and 1,212 collection centers. The anticipated revenue for this project is expected to become visible in the coming quarter of fiscal year 2024. We have also successfully operationalized 9 CT scans in the state of Maharashtra. The remaining 30 CT scans would be soon operationalized, and the revenue projections are expected to materialize from the first quarter of fiscal year 2025. Over the last 3 months, we have successfully established 6 new pathology labs and established 116 pathology collection centers and 64 new telereporting centers. These endeavors have been meticulously aligned with our expansion strategy. As mentioned earlier, as a strategy, we are establishing 40 labs across these various locations in premises which are taken on lease and not in the government premises. These labs will allow us to augment revenues from PPP as well as incremental revenue from the B2C and B2B customer segments, and therefore allow us to leverage the infrastructure which we are creating beyond the existing long-term PPP contracts. These labs further will also allow us to grow our network of collection centers, franchisees, etc. The Odisha project, which was operationalized in Q2 FY24, is ramping up well, and we continue to see good traction from that state. Our B2C business is also growing slowly and steadily and gaining momentum. We see a good traction of packages getting sold, along with increase in Krsnaa's brand awareness in the respective regions. We strive to improve customer experience with exceptional healthcare solutions tailored to individual requirements. As part of our continuous improvement efforts, we are constantly exploring new testing capabilities to cater to the evolving needs of our patients and customers. We are aggressively embracing cutting-edge technologies, implementing analytical tools for critical departments such as pathology, radiology, supply chain, and others to provide a comprehensive range of diagnostic services that meet the highest standards of accuracy and efficiency. Our consistent growth in revenues and profitability is a testament to the effectiveness of a robust pricing strategy. Our ability to maintain cost competitiveness stems from several factors, including economies of scale, large pool of captive customers, strong balance sheet, and efficient working capital management, and an optimized cost structure. These factors enable us to pursue sustainable growth opportunities and drive continued success. We stand at the threshold of infinite possibilities. We remain resolute in our approach to adapt, innovate, and excel. We have charted ambitious plans to unlock opportunities for growth and expansion, ensuring that we continue to make a positive impact on people's lives and contribute to the advancement of the healthcare industry. With these in mind, I would like to now turn the call over to Mr. Pawan Daga, our Chief Financial Officer, who will provide further insights into our financial performance. Thank you.
Thank you, Yash. Good afternoon, everyone. I will now present the financial highlights for the quarter ending in December 2023. In the third quarter of FY24, our total revenue from operations experienced a notable upsurge reaching rupees 158 crores, making an impressive 34% year-on-year growth. Shifting our focus to operational performance, our Q3 FY24 EBITDA reached rupees 38 crore, signifying a commendable 27% year-on-year growth, and we maintained a healthy margin of 24%. Additionally, our net profit amounting to rupees 13 crore with a corresponding margin of 8%. The net profit has been impacted by 4 crore, which includes Ind AS impact of a long-term lease amounting to rupees 3.32 crore and one-time expenses of a finance cost arising out of processing fee of rupees 0.68 crore. In 9 months FY24, our EBITDA is exhibited a significant increase, reaching rupees 102 crores, demonstrating an outstanding 14% year-on-year growth, along with substantial margin of 23%. Our net profit has reached rupees 38 crore with a margin of 8%. Taking a closer look at our balance sheet, we currently hold a gross debt of rupees 133 crores while maintaining a cash and cash equivalent worth rupees 228 crores as on December 31st, 2023. It is worth noting that our company continues to uphold a net debt-free status, a noteworthy accomplishment. Our receivable as on 9 months FY24 is 121 days, which has increased due to delay in payment from Himachal Pradesh and Manipur. We would like to update you that we have started receiving the payment from this quarter onwards, and the state receivable days will be normalized by the year end. Thank you. We can now open the floor for the question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Vandit Dharamshi from Alpha Invesco. Please go ahead.
Hello.
Yes, Mr.
Hello.
Please go ahead.
Yeah, am I audible? Yeah, congratulations, sir, on great set of numbers. I have some bookkeeping questions to start with. Firstly, on debt, does the debt number that we give include the lease liability?
Yes, it includes the lease liability.
Okay, sir. And what would be the lease liability in 9 months FY24 number?
Sorry, could you repeat the last part? Your voice is not very clear.
What would be the lease liability amount in 9 months FY24 number?
So the lease liability on account of MRI equipment, which is 20 crores or.
Okay, sir. And one more question on debt. So right now, I think inclusive of lease liability, we have around 133 crore of debt. So is there any plans for us to, what policy or what do we have? What is our take on debt, sir? Is there any specific debt to equity ratio that we have in mind, or what is our take on debt?
So, currently from a position perspective, we maintain that we'll be trying our best to remain a debt-free company. However, depending on what is the kind of project that we are undertaking, and if it is more efficient to take debt, we can take those decisions accordingly. But as of now, we continue to be a debt-free company.
Okay, sir. Second question, sir, on lines of payable, sir. What would be our payable number for FY24, 9 months? Maybe in days or absolute amount, whatever you have.
It is in the range of 75 to 90 crores.
Okay, sir. And last question, sir. I think in our presentation we have mentioned that on a 9-month FY24 basis, we have served close to 1 crore 11 lakh customers or patients. So in that, what would be the number of patients whose billing would happen directly and percentage of patients who would be under a subsidy scheme or maybe where the government is paying? If you can just give us a broad split.
So our this credit billing is in the range of 30% and the cash billing in the range of 30%. The credit billing is in the range of 70% and the cash billing in the range of 30%.
Okay, sir. Thank you so much, sir. Wishing you all the very best.
Thank you.
Thank you. The next question is from the line of Lokesh Manik from Vallum Capital. Please go ahead.
Yeah, hi. Good afternoon to the team. I just have one question. If you can provide the revenue breakup between CT, MRI, telereporting, and pathology, it would be great. Either Q3 or 9 months, either will do.
The radiology business, which is in the range of 60 to 65%, and the pathology business in the range of 30 to 35%. If you need the detailed breakup, you can reach out to our investor relationship, Mr. Vivek Jain. He can provide you the further details.
Sure, I will do that. That's it from my side. Thank you so much.
Thank you. The next question is from the line of Omkar Kamtekar from Bonanza Portfolio Limited. Please go ahead.
Hello. Congratulations on a good set of numbers. Firstly, what I wanted to ask was with respect to the timeline of the cities, the city in Maharashtra. So we have only operationalized 9 out of the 56 radiology centers in Maharashtra, and the Maharashtra accounts for the largest amount of radiology centers we have. So in approximate what time frame over the next 4 or 5 quarters will the full all the centers would be operationalized?
Yeah. So, see, the reason for delays is mostly, where the government has to give us the handover of the sites, as well as, operational issues like having electricity on site. So we are working ferociously to ensure that we get the completion done as soon as possible. We expect it to be done within the next 2 to 3 quarters, in a phased manner as we get the sites ready.
So all 56, so by end of H1 FY25 is what we can expect all of the 56 to be online under our office.
No. The first is one for the 30 CT scans, out of which 9 have been implemented. That will get covered in the next 2 to 3 quarters. And the balance, the new tender that we won, since we just signed the agreement, it will take some time to operationalize.
Understood. So you are saying by H1 FY25, I can say 30 would be operational. Would that be correct to assume that?
Yes.
Okay. So 30 would be done by H1 FY23. And and also the Rajasthan number that is showing that there is only one center. So that is the one that is under a dispute, or will this number change?
I'm sorry, if you could repeat the question.
So in the radiology centers, in page number 25 of the investor presentation, Rajasthan, it is showing radiology center being one. So this is the one that is under dispute?
No. The Rajasthan center is one center of MRI in Churu. So that is a radiology center. That is not under dispute. Which is with the High Court is the pathology project, not the radiology project.
Understood. That was the question. And finally, with respect to asset turns, so from in the presentation you have said that when our assets mature, we generate approximately 32% ROC from the asset. What is the additional gross block that we are envisaging over the next 1.5 year?
Yeah. So the incremental additions that we expect to the gross block could be in the range, and as we've been maintaining earlier as well, it could be in the range of about 150 to 200 crores, given that we continue to win more projects. So they will be added to these the gross block, and also incremental revenues will start coming in as and when the centers get implemented and they start ramping up.
So whatever was what was the historical one will be continued. We are not going to additionally incrementally allocate anything further.
No. As and when the tender wins happen, for example, like the Maharashtra MRI tender that we've been shortlisted, as and when the implementation happens, that will require an additional investment, which will again add to our gross block. And likewise, if as and when there are new projects that get shortlisted, where we get shortlisted or we enter into the agreements, then additional capex will be incurred and which will be added to the gross block.
Understood. Thank you. I'll join back in the queue.
Thank you. The next question is from the line of Aditya Khemka from InCred PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, first question on the receivable days. So this 112 days, does this include any outstanding from Himachal? As in when, you guys had to shut the lab to get the payment from the authorities, or is this post the payment being received from Himachal?
No, this is as on the position on 31st December 2023. We have received the subsequent payment, but as on 31st December, the receivable days are 121 days, which is including the outstanding of Himachal Pradesh pathology.
Got it. And secondly, you mentioned the capex of 200 crores. So can you break that up between different tenders? How much would be Maharashtra CT MRI, and how much would be, let's say, other states where you might have won some projects?
Sorry, if you could just repeat that question, please.
Yeah. So Yashbhai, you mentioned that the capex for the next 2 years will be in the range of 150 to 200 crores. So can you break that up between Maharashtra and the Maharashtra CT MRI project and other states where you might have ongoing projects?
So, Aditya ji, we have like the current scenario where the new projects were awarded, Maharashtra MRI, Madhya Pradesh MRI, and the city, Maharashtra city of an old one which is going to be deployed. So the capex range for this year, next fiscal FY25, which will be in the range of 150 to 180 crores, kind of. And this year we anyways incurred 150 crore considering all pathology projects.
Got it. I understand. Just an additional question on the capex. So let's say if you win the Rajasthan tender, if the decision of the court comes in your favor, will this 150 to 200 ready for 25 will further go up because of that?
Yes, that will be additional over and above these capex that we plan to invest.
Okay. And Yashbhai, how much could be the potential capex in Rajasthan if you win that tender?
Rajasthan, the overall capex is what we expect is in the range of about 200 to 250 crores.
So if you win it, then next year your capex will be in the range of 450 to 500 crores. Is that a correct assessment?
Yeah, if Rajasthan comes through, then that will be the expected capex that we may have to have an outlay. But again, that will be spread over a period of 1 year or so.
Yeah, exactly. So another question on this then, Yashbhai, I think, in between there was a thought of not buying the machines outright and taking them on per pay-per-use sort of model or a lease model. Just wanted to understand where that thought process lies today, and, is this capex despite taking some machines or pay-per-use, or are we outright purchasing machines?
So we have tried these models and we continue to explore this particular aspect of getting these equipments on pay-per-use, especially now with these kind of orders in hand. We are again, the discussions are ongoing with the vendors, and we'll also try to see as much as possible how we can move to the so-called asset-light model, where we don't necessarily have to invest in the capex but get it on a pay-per-use model. So those conversations are ongoing as of now.
Yeah, but the guidance that you are giving for capex for FY25 of 150 to 200 crores, that assumes that you are going to outright purchase all machines, right?
No. So this is what we are bound to invest considering the projects in hand. Of course, if we go through the pay-per-use model, then the entire kind of capex will not be required to be invested by us, and it will go on the pay-per-use model. But from an amount perspective is what we are quoting.
I understand. The last question I had was, given that Rajasthan is also pathology and, you have certain other pathology tenders as well, so your current mix between radiology and pathology, which is 65-35, 2-3 years down the road, do you see it becoming like 50-50? Or what would be the mix of your revenue if you win the Rajasthan tender 2-3 years down the road? What mix do you foresee?
So with Rajasthan coming through as well as Maharashtra, and the MP MRI tender, I believe it would be in the range of 65-35. Initially, Rajasthan, if it picks up well, Rajasthan might have a larger share. But we will now we see there are more, radiology, or we would rather want to focus back on radiology tenders as well. So we would like to maintain in the ratio of about 60-40. Ideal would be 50-50, where radiology and pathology both contribute 50-50.
I understand. Just also on the margin front, so as you do more pathology, you feel the margin at 23-25%, that is where you feel we will stagnate, or do you feel that once the operating leverage comes in, we can go back to our historical margins of close to 30%?
No, so with pathology projects coming in, and as you also know, from an industry perspective, pathology margins are a bit lower. So of course, what we see is with these Assam, Odisha, and all the other projects, stabilizing, the margins will be in the range of about 25% or plus.
25% and above. Is that what you're saying?
Yeah, it's 25% is what we believe it will stabilize. Now, depending on how, if you have more radiology projects, then there might be an improvement. But with the current projects on hand, we believe it will be stabilized at 25%.
Understood. Just one last question before I go back in the queue. On the B2C initiative, I see you guys have made a wholly owned subsidiary, and I know that the B2C initiative, has been ongoing for a while now. So can you give us some numbers as to what percentage of our current revenue comes from B2C? And let's say in 3 years' time, how do you see B2C shaping up?
Yeah. So, Aditi, the current numbers, is not, as I said, it's just a start for Krsnaa in entering into the B2C space. Though the initial success that we had in, selling the packages and whatever, that has been really great. The current contribution of B2C was in the range of about, 1 to 2% of the overall revenues. But with the successes that we've had and, the kind of response we've seen in the market where Krsnaa's brand was accepted, Krsnaa services were accepted, we believe that this, in a long-term range, it can create a good vertical or a pipeline for us. And that is what we are working on. It will be too early for me to, project any kind of numbers as of now, but hopefully, once the management team and the other processes are set in place, we'll be in a better position to answer that question.
I understand, yes, but I just want to understand your B2C model a little better. So, in the government model, that we get the lab, government, we don't pay rent. In B2C, you have, and if you don't pay rent on the government side, you are able to obviously price your tests accordingly.
Your voice is cracking a lot. I'm sorry, I'm not able to hear you.
I'm sorry. Is this any better?
Go on.
Yeah. Okay. So my last question was that, on the pricing side of your test, be it a MRI or a CT or a pathology test, wouldn't your B2C prices need to be materially higher than your B2G prices, given that your cost on the B2C side will be higher than B2G because there will be rental cost, there will be other referral cost in the B2C segment, which you don't incur on the B2G side?
Right. So yes, they will be higher, but not materially higher, because what models we've tested, since what we're trying to do here is leverage the existing infrastructure that we have, like the labs setup that we've done, or the equipments on the CT scan and MRIs. So from that perspective, the incremental cost will largely be more towards the marketing cost or, such ancillary cost. And in spite of this, we see that our prices that we have currently offered in the market on the B2C space are significantly lower than the competition. And we believe that we'll be able to continue offering our services at these prices as we go along. I don't see it to be marginally or materially higher than the current B2G prices.
And Yashbhai, would you be using franchisees to create collection centers, or do you plan to own, or open a self-owned collection centers in these B2C spaces?
Yeah, so currently we are exploring all the three models. One is what is typically known as a company-owned, company-operated collection center. Then there are franchises also that are ramping up, which is, increasing day by day. And there are some other models that we are exploring. So I believe it will be a combination of various of these strategies. And, with Dr. Prashant and team joining in also, then we'll try to see which strategy works best, and accordingly the expansion will happen.
Understood. Thank you, Yashbhai, and all the best, gentlemen.
Thank you so much.
Thank you. The next question is from the line of Avadut Joshi from Branston Investments. Please go ahead.
Hello. Am I audible?
Yes, Mr. Avadut. Please go ahead.
Yeah. Just one clarification about this lease rental impact you have mentioned in the remarks about 3.32 crores. So last quarter, I think it was around 2.5 crores. So I just wanted to know, is it because of the expansion what we are doing for the B2C it is occurring, or what's the exact reason for this?
So this is primarily because of, certain equipment that we've taken on lease payment basis, and of these labs that we've opened on, lease premises. So that is the impact which you are seeing in the financial statements. It's a combination of radiology equipment and certain of these labs that we've taken on lease premises. Okay, so this is not the lease premises is just not for the B2C, but could be the government projects also. Is that correct? Yes, actually they are, these are, what we've decided as a strategy is these labs that earlier we were setting up in government premises, we've decided to set them in private lease premises so we can augment both business from government as well as business from B2C and B2B initiatives. Understood. And just another clarification, Assam is fully operational? That's because in the presentation it is mentioned that 7 labs have been operational. Whether it is fully operational, that's what I I think there are about 3 labs which are under implementation, which is expected to get completed by end of this quarter. Okay, so we have sites and everything is in place, just it will be operational. Yes. Oh, okay, that's it from us. Thank you so much and all the best. Thank you.
Thank you. The next question is from the line of Amol Rao from Kitara Capital. Please go ahead.
Hi. Just a couple of questions. One clarification. So, Assam, Odisha and Maharashtra, these are the 3 major orders that basically will show a heightened state of operationalization in the next quarter onwards, right? Maharashtra is in quarter 1 of next year, but Assam and Odisha next quarter. Am I correct in understanding that?
Yes. So Assam and Odisha have been operationalized. Like as I mentioned earlier, Assam 3 labs will be completed in this quarter Q4. So basically all the labs will be operationalized, and from next financial year the revenues will start. You'll see more contribution from the revenues coming from Assam and Odisha. Maharashtra completed 9 out of 30, and the balance will be happen over the next couple of quarters. Hoping by H1 of next financial year we complete the entire 39 installations.
Perfect. And second clarification on the operations is that the BMC contract we got a widened scope to include home collections. Am I correct? So that's working in our favor right now, correct? Am I right?
Yes. So that's yeah. So we've been asked to do home collection services as well. And also, there is certain convenience fee that we can charge. So that process has been started.
Perfect. And what's the response there, Yash, if I may ask? How's it been? How's that experience been? It's been a smooth operation so far?
So, of course, there were operational hiccups with a project like this, where the ramp-up was high. But now it has smoothed out.
All right. And congratulations on the elevation to GMD, and wish you all the best.
Sure. Thank you.
Thanks.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Am I audible?
Yes, Mr. Deepak. Please go ahead.
Thank you very much for this opportunity. So first up, I just wanted to understand in terms of CAPEX, the planning that we have, how are we going to fund it?
So we have a combination of our internal accruals as well as certain vendor credit that we've been discussing, where vendors are now willing to provide us financing. This is the primary source that we're looking for. We might also evaluate debt if that becomes a more efficient way of capital. But like I also mentioned to the previous question, we are exploring where we can get these equipments on a paper scan or a pay-per-use model. And the discussions are at an advanced stage. So a combination of all of these will help us to invest in these new infrastructure or new equipments.
Okay. So when we say this 150-200 crores, it doesn't take into impact the benefit that you can get it from vendor credits and all. Or this is on the gross basis, right?
This is all of this. So if I have to invest about 200 crores, all these various initiatives that I spoke about will be utilized to fund this CAPEX.
Okay. Understood. And then the Rajasthan would be additional, right? 200-250 crores. So I mean, to me, this capex number looks very high. So just trying to understand to meet that, are we going to over leverage our balance sheet or because you did mention that we focus on to be on the asset light model, right? So what?
Correct. So we continue to do so with all these, even if, as I said, even if Rajasthan has to be implemented, again, there are discussions going on. We'll try to keep away from debt as much as possible. However, given that if today there are certain, debt structures which makes it more efficient to go for a debt, we might think about it. But our efforts and endeavors are to ensure that we remain debt-free in spite of all these capex projects.
Okay, understood. Fair enough. And in terms of Rajasthan, currently you are awaiting some response, right, from the court or something like that. So by when do you expect, meaningful or a revenue can start? So what would be the thought process there? Earlier I think we were targeting by FY24 end or by first quarter revenue to start, right? So where are we now as we speak?
Yeah. See, from our team's perspective, we are all ready. We are just waiting for the High Court to give a judgment, and we are all keeping our fingers crossed and optimists that the decision will come in our favor. But as I said, since it is a matter which is sub judice, as of now, we just have to wait till the High Court makes a decision, and accordingly, then the next steps begin.
Okay, and when is it expected?
So it's expected by end of this month.
Okay, by Feb end. And assuming that the decision comes in our favor, then from Feb end, how much time will it take for you to actually start the revenue there?
So after we get the order, then the process of getting the agreements executed, and then the installation of labs will have to be done because there are multiple labs, almost 100 plus labs to be established across the state of Rajasthan. So Rajasthan revenues, I believe, will meaningfully come only in the second half of the year or towards Q4 of FY 24-25.
Understood. So that gives a fair understanding. And in terms of, growth outlook and margins outlook for next year, anything, 30% CAGR is what we are looking at for FY 25 as well, right, in terms of revenue growth?
Correct.
And what sort of margins we might look at?
So as I said, margin profile-wise, given that there are pathology projects which will have a major revenue contribution next fiscal year, the EBITDA margins we are looking at, which will be stable at 25%. Of course, our efforts are, to see how we can improve them. But we believe, considering these pathology projects, it will be stable at around 25%.
25%, because earlier we were targeting 26 to 28% kind of a margin range, right? So anything has changed? That there is a slight change in our view?
Yeah, the change is largely because, these, as we've seen the projects ramping up, especially Assam, Odisha, where the test menu and given the way these contracts are ramping up and shaping up, certain of these tests, the consumption cost is a bit higher side, so that is how we are. We see that it will stabilize. Of course, with some of the other projects coming through, there might be an improvement, but I would want to be, especially on the numbers, be a bit conservative and believe that 25 is a stable EBITDA margins for us.
And that excludes other income, right? You are saying operational basis, you are targeting that 25.
Oh, yes, of course. Yes.
Okay, and just one last small thing. In terms of lease rental, I last couple of quarters lease. So is that something which will continue in coming quarters as well?
This amount will not go significantly increasing from here onwards. It will be stable at this level or maybe minimized in over a period of time.
Stable at 3 crores per quarter.
No. So this is an impact of lease equipment and the rental, but over a period, this will be reduced over a period of time. This is in one time, which we see in this quarter and the last quarter.
So this is a one time. The reason I was trying to ask because you'll always have new equipments and new premises, right? So ideally your lease rental will keep on building up. So is that understanding wrong, basically? So yeah.
No. So currently for the projects that we have already implemented, the impact has already been accounted for, and the labs on lease has already been done. So we don't expect newer lease wins, except for wherever these are financing arrangements that we are exploring. But for the chart that you see in the financial statement, the 3 crores, this amount will start reducing from the subsequent quarters is what Pawan was alluding to.
Okay, so the charge to this project will reduce, but a new charge may come because of other projects, right?
Yes. So that depending on how we structure the lease and how the accounting standards adopted, the charge will come accordingly.
Okay. Fair enough. I understood. Yeah. I think that's it from my side. All the very best to you. Thank you so much.
Sure. Thank you.
Thank you. The next question is from the line of Mayur Parkeria from Wealth Managers India Private Limited. Please go ahead.
Good afternoon, and thank you for taking my questions. Am I audible?
Yes, Mr. Mayur, but you're sounding a little low.
Yeah.
Is it okay now?
Yes, it's fine.
Yeah. So actually, it's just a couple of questions from my side. Currently, we are 9 months basis, our adjusted EBITDA margins are in the region of 25 itself. You said that if pathology centers, as expected in the next year, are going to increase, and the margin should come down, right? And you are mentioning that our aspiration is to maintain the 25% margin. So I just didn't understand which of the sides.
The margins are not expected to come down. What I'm saying is currently what we are operating at about 25%, we will continue that trend of maintaining 25%. The only thing earlier, like we were targeting to have about 27 to 28% or in that kind of range. But given that the pathology mix is increasing in the business with higher consumption cost, that is the reason why we believe 25% will be stable EBITDA level throughout the next financial year.
Okay, so despite pathology increasing in the next year, you don't see margins getting diluted from here on. That is right.
Yes, we don't see margins getting diluted. It will remain stable at these levels.
Okay. And one more little high-level question in the sense of, now we are present almost in 16 states in some way or the other, right? Broadly, if we look at our presence, bearing states, bearing some large states like Gujarat or either here on the eastern side, we are present more or less across many large states now, and we are already in the very hyper growth stage where revenues are rising at 30% and we are maintaining 30% CAGR. How will you ensure, or at what is the time when we will say that it is time for us to start looking at bringing the growth, not only running after growth, but ensuring that our financial metrics is in terms of return on capital employed and margins, actually the reported basis, not all adjusted basis, but on reported basis they start depicting the true picture of the business, which is underlying the centers and the business which is there. At which stage do we think? Is it 1 year? Is it 2 years down the line? Or you believe we are already at that one stage and now, because the opportunity may be continue to be very large, but at the same time, we need to size it up based on our size and what risk or financial risk and operational risk which comes along. So at which stage do you think we will start looking at that phase? Is it 2 years down the line or is it a little more longer?
So, if you see, first of all, just to give you a bit of background, Krsnaa is a young company with just about 10 years, and our growth has been largely in the last 5 years. And within that, we've been achieving these kind of numbers or milestones. Now, along with this, there have been opportunities of large states, whether it is Assam, Odisha, Rajasthan, or Maharashtra, for example. So, from a company's growth and long-term perspective, of course, these contracts or these tenders are important for the company, and we would want to grow. Having said that, like we maintained and in the previous quarters we said, now that most of the centers are getting stabilized, their operations are getting stabilized, we expect the business to also stabilize, and equally we've started focusing on the B2C verticals as well. So directionally, if you ask me, yes, the company has reached a certain critical mass where things have now started stabilizing, and you could also see from the quarterly margins perspective where they have shown an improvement. If you ask me from a growth potential perspective, of course, there are many large projects, but we are also now becoming very selective in which tender to participate. Provided they are aligned to our financial metrics, only in those tenders we would continue to participate and see if they add to the overall value that we are creating for the stakeholders. So, in my opinion, it will be a combination of, if there are some good opportunities, of course we would want to pursue. Any company would want to pursue such good opportunities. But I think the opportunity is large, and we'll be more selective going forward is how I'd want to answer that question.
So you already have started becoming a little more selective than what, given the scale at which we are doing and already reaching that size. Okay, great. That was great to hear. Just one last question. What would be our proportion of revenues which will be mapped to matured centers, semi-matured, and new ones? You have given the ROCE differences which are there, but what would be the proportion currently, let's say in the 9 months, which would be mapped on that side?
So, if you can see, we calculate this on an annual basis, but still I can give you the background on that percent. See, the semi-matured, out of the semi-matured, the annualized number was 14% of gross block. Out of that, we can see 5% will move to the mature side. And from the newly launched centers, we can see a 12 to 15% of the gross block will shift to the semi-matured block.
I understand. No, the reason I asked on the revenue side because the centers at different scale would also have different capital turnover ratios at each stage. So I just was trying to understand that how much of revenue is mapped on each of that stage, if possible.
So which is not readily available as of now. We can you can reach out to our investor relationship, Vivek. So we can provide you that information.
Thank you so much, and wish you all the best. Thank you.
Thanks.
Thank you. The next question is from the line of Aditya Khemka from InCred PMS. Please go ahead.
Yeah. Hi, thanks for the follow-up. Yashwant, just a question on Rajasthan tender again because of the capex number that you said. So if I remember correctly, our expected peak potential revenue from Rajasthan is 250 to 300 crores. And the capex number you alluded to was in the range of 200 to 250 crores. So despite being pathology-driven tender, the capex asset turn that I can see you talking about in this business is between 1.1 to 1.2 times, it seems. So is there, I'm missing something or are these the numbers that you wanted to discuss?
So basically, the requirement for the tender is to set up certain equipments which are, large equipments or capex heavy equipments, or the cost is higher, and that is the reason why, if you see, the investment is larger. But from a turnover perspective or from an asset turn perspective, what we are expecting is 200 is like a conservative number. Of course, as the business ramp-ups, this number should, in our opinion, it will certainly try our best to increase the number. But on baseline is what I'm quoting the number of the top line. But the investment is required as per the tender norms.
Right, and because it is pathology, these new equipment you're talking about, these would be analyzers by and large, right?
Yeah, analyzers, immunoassays, all these equipments.
Understood. And what kind of margins do you foresee if Rajasthan tender were to materialize? What sort of EBITDA margins would we have there? 25% or more or less?
I think it will be too early. As and when these projects get operationalized, we can be able to give a much better picture.
Yeah, no, I'll tell you why I'm asking about the margins. Even if I assume this margin, and let's say you do 300 crores of top line at peak in Rajasthan, it's just 75 crores of EBITDA, and then post depreciation and tax, you'll probably be left with something like 50 crores of PAT, and 50 crores of PAT on a gross block which you deploy of anywhere between 200 to 250 crores. That's like a 20% pre-tax ROC. So 20% pre-tax ROC. Is that something you guys are comfortable with? Is what I wanted to check.
So Aditya, if you remember earlier also we had quoted Rajasthan is a very distinct and unique project, both from a expectation of top line and the margins. However, as I said, it will be too early for us to come in now. Of course, when we bid for the project, we had certain projections in mind, and which is making this a favorable project like others. However, I think as of now, I'd want to revert back only when we have some more credible information, given that it's currently in the courts.
I understand. Just one last question on Rajasthan, because I just bothered about that. So, it's a cash project or it's a credit project?
It's a credit project.
It's a credit project. Okay. Yeah. So, no, that's it from me. Thank you.
So, Aditya, just, like I've been maintaining, and Mr. Muthu also mentioned, what we expect is the 30% growth is without Rajasthan.
Yeah, that is well understood. Yeah. Thanks, Yash. Thank you.
Thanks.
Thank you. The next question is from the line of Rajneesh Bahal, an individual investor. Please go ahead.
Good afternoon. I have two questions. One is asked by the previous participant. Like you told that you mobilize to the site when it is provided by the government. In case, is there any delay from the government side? Do you get any compensation from the government?
No, there is no compensation. Typically, it works is when we start any PPP installation, we approach to the government asking them to hand over the sites. As and when the sites get handled, then only the equipment procurement and installation begins. But there's no any kind of compensation given by the government.
Okay. And second question, now you are evaluating pay-per-use model versus your own hired model. So what will be the margins between two models? It will come down or it will go up?
So there might be an impact on the EBITDA margins, but definitely the PAT margins will be much better because it's an asset-light model.
Okay, asset-light model, so margins. And this Rajasthan tender is like 50-50 JV, no? Your 250 crores revenue which you are talking about is in the JV model or is your own 250 crores?
No, so here we have PSU as a partner, but they have a very nominal share of revenue. The rest of the entire revenue comes to Krsnaa.
And what is the arrangement with them? Will they be investing in the capex or you will be doing the whole capex?
No, the entire capex will be done by Krsnaa.
Okay. And last question is regarding when you do the B2G projects. So is there any like minimum guaranteed number of tests will be given to you? Is there something like, what is the arrangement there?
No PPP that we've seen where government assures us with any numbers. It is based on our own survey and estimation that we do.
And is there any cap on the number? If the number goes above that number, there is further discount on your rates?
No, there is no cap as such. So these are initiatives taken by the government to provide access to quality diagnostics or healthcare to the people of that state. There is no cap or there cannot be such cap. You can't restrict people from availing healthcare services.
No, I'm not asking that the cap. That is there like, for example, you establish a center and government is, you have done your survey and the number goes beyond that number. Is there any further discount on the rates?
No, nothing like that.
And you are trying to enter into B2C business. Like you have set up a central lab in Mumbai, in Maharashtra. Are you planning to set any central labs?
So we have set up labs in Maharashtra as well as Odisha and Assam. Then we have labs in Himachal Pradesh and Punjab as well. So we'll be leveraging all these infrastructure for the B2C initiatives.
Okay. Thank you. That's all from my side.
Thank you.
Sure. Thank you.
The next question is from the line of Omkar Kamtekar from Bonanza Portfolio Limited. Please go ahead.
Thank you for the follow-up question. Firstly, just a clarification. The radiology and pathology mix split what was given was 65-35. Was that correct?
Yes.
And just to understand, so on a calculated basis, the average revenue per patient from the 11.1 million patients that we have served in the 9 months, that equates to 408 rupees odd. So let's take it at 400. What are the measures that we will be taking to improve this revenue per patient, A? And with respect to the margin, as we have stated that it is going to be steady state at 25% for the few quarters and year henceforth. What are the measures that you think, or what are the activities that you are going to undertake to improve this margin with respect to because compared to other peers, our margins are although similar, but our revenue per patient is lower. So how does that work? If we can improve the margins as well, what are the initiatives that we are taking to do that?
To just give you a bit of perspective here, first of all, you need to understand that Krsnaa offers the test at prices which are almost 50 to 60% lower than the market rates. And that is how we operate in the PPP setup. Now, From improving the pricing, most of our prices are linked to the tender rates that we have contractually signed with these various authorities. There are initiatives that we have done, for example, offering a mix of various tests, or it could be cross-selling certain of our services, or introducing packages which could be at higher price points. So these all initiatives are undertaken, and as I said earlier as well, we have seen a great success in selling packages even in the kind of PPP model. So with this combination, of course, our efforts are there to increase the price or the revenue per patient. But just to, make it clear, our business is linked to rates which are hard-coded or, embedded in the contract. So we do not have a great flexibility, but of course, there's a huge potential of increasing the revenue through volume. And this is the unique feature of PPP, where you have significant volumes, which we probably not see even in, other players having these kind of volumes.
Understood. So my second question was coming on that only, because we have this captive audience via our nature of the business being through these tenders. So the question that I was wanting to come to is, how much time will it take for us, for example, if you take a new project and it gets allocated to you, what is the time for it to mature? Because as you have said in your PPT, it takes about it returns you up to 30% of ROCE when the asset gets matured. So the maturity time for us would be much lower than the peers. So what is that maturity time for the asset to become mature over a period?
Again, it differs from project to project and between radiology and pathology, but typically our centers mature within 1 to 1.5 years of time if it's a radiology. Pathology, again, depending on the test menu size, it can even be 9 months to 1 year.
So 9 months to 1 year. Okay. And a small clarification, generally the margins would be higher on the radiology side, just to understand.
Correct. Absolutely.
That's it. Thank you.
Thank you.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Thanks for taking my question. Only one question. So there is this talk of a national essential diagnostics list which the government is probably looking to implement. Have we heard anything about it? You had been party discussions around this, and what does it really mean, assuming this gets implemented for us from a business perspective?
Yes, so the conversations are going on by the government authorities, and this has been going on. We had been asked for certain inputs. What I believe is this will be, a list that they are trying to look at, and while it's too early to tell, but this might have what we believe is a good impact for Krsnaa, given that it will create more opportunities with more tests. Earlier there were basic tests, now there are certain special tests, so they are looking at all of these. So in my opinion, this certainly will be, welcome for Krsnaa as and when it gets implemented.
And this is what's going to be a model that states will have to follow, which is prescribed by the central government.
Yes. So typically, whenever they come up with such lists, they create these list or test menu, which other states have to follow or implement as part of the PPP initiatives.
Got it. And what's your sense about what timelines do we see this thing getting rolled out?
Which will be too difficult for me to answer that question for now.
Fair enough. And lastly, you talked about the tender that you won in recent times. Versus, say, a couple of years back and versus the pipeline and the kind of conversations you're having now, qualitatively, can you just tell us what is the difference in the kind of and the scale of conversations you're having now versus what you're having maybe a year and a half, 2 years back?
Sorry, Nitin, if you could just repeat the question. I couldn't get the last part.
I'm saying the kind of conversations you're having in various states now who are looking to probably roll out tenders, PPP models of their own. What is the difference in the scale and the quality of discussions you were having now versus what you were having maybe a couple of years back? Are there larger in scale tenders? Are there more states looking for these things?
Yeah, so frankly, first of all, we don't have conversations with any governments. It's basically as and when these governments decide or authorities decide to publish a tender. Having said that, after the successful installation of or implementation of various PPP projects, of course, there have been discussions where now many states are exploring avenues to come up with more PPP tenders, and which I believe is creating more opportunities for us in the near future. So these conversations are going on more and more states, and especially with the emphasis from the various governments, whether it is the central or the state, to increase access to healthcare for the citizens of the country. I think these conversations eventually will materialize into more opportunities for us.
Okay, thank you so much.
Thank you. Due to time constraint, that was the last question for today. I would now like to hand the conference over to Mr. Yash for closing comments. Thank you, and over to you, sir.
Thank you. Thank you, everyone, for joining our Q3 FY24 earnings call. Hopefully, we were able to address to all the queries. If any questions remain unanswered, please feel free to connect with our investor relationship team's head, Mr. Vivek Jain. Look forward to interacting with you in the future quarters. Thank you, and have a good day, everyone.
On behalf of JM Financial, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.